Hello everyone, my name's Grant Beecham and today I'm going to give you a beginner's guide into buy-to-let investing. We're going to look at some of the pros and look at some of the cons of buy-to-let investing, and we're going to cover some key aspects that you need to understand if you are going to become a property investor. So we're going to look at the research that you need to carry out when you're looking for these deals, which areas in the UK are the best areas for buy-to-let right now in 2024, and then what you have to do after you have found the perfect deal, the next steps that you have to take once you've found that elusive buy-to-let deal. So the first thing that I want to cover is the question, is buy-to-let still a good investment strategy? From my experience, I'm here to tell you that yes, right now in 2024, buy-to-let is still a good investment strategy, no matter what a lot of people say. And you may have heard the phrase buy-to-let is dead. A lot of people say that, and a lot of people have been saying that for a number of years. I remember when I bought my first investment property, and I remember people telling me back then that buy-to-let is not a good investment. The phrase buy-to-let is dead hadn't quite picked up yet, but that is a key phrase that's used all the time. And I think people that say buy-to-let is dead either don't have a lot of experience in buy-to-let, don't have the money to get involved in buy-to-let, or have been involved in buy-to-let but they've done it in the wrong areas, with the wrong investment strategy, with the wrong property management people, with the wrong deal sources, and they've had a bad experience. I'm here to tell you that if you do it correctly and you follow all the steps that we're going to go through today, buy-to-let is a very good investment. And I'm going to tell you why right now. So, for example, let's say that we've got £30,000 to invest, okay? £30,000. It's not a lot of money, but if we put it in the stock market's a solid investment. Typically, the stock market goes up over time. It doubles every 10 years. Historically, the stock market has doubled every 10 years. Property has doubled every 10 years. So we could say that property and the stock market are similar investments with similar returns. But you'd be wrong, because if I was to invest £30,000 in property, what would the £30,000 be? It would be a down payment, a deposit. So that £30,000 investment would buy me a £150,000 house. And in the 10 years, the investment doesn't double, the house price doubles. So now my £150,000 has turned into £300,000. So effectively, I've made £150,000 off my £30,000. This is called leverage. And property investors use leverage, use the bank's money to buy property and then wait for the property prices to rise and collect the equity. This is called leverage, using the bank's money to buy property and then waiting for the property to appreciate. Now, you can't do that with other types of assets. If you went to the bank and you said to them, can I borrow £120,000 to put in the stock market? They'd say, no, we don't do that, it's too risky. If you went to the bank and said, can I borrow £30,000 to invest in gold? They'd say, no, too risky. However, as long as you had good credit and you had a job, or at least £25,000 of income coming in, and you went to the bank and you said, hey, I've got a £30,000 deposit, can you lend me £120,000 to buy a house? More often than not, they're going to say yes. So the banks will lend you money to buy property. Why? Because property is seen as a safe investment. If the banks see it as safe, then you should also see it as a safe investment. However, a quick disclaimer, property and buy-to-let investing, standard vanilla buy-to-let investing, is not a get-rich-quick scheme. It does take time to compound returns, and if you're looking to make £100,000 in 2 months, then I suggest you go and gamble on Bitcoin. That's not advice, it's me being sarcastic. Okay? But a lot of people come in to buy-to-let investing and they want to double the money in a year. Well, it doesn't work like that. However, you can make very, very good money if you buy a property below market value, buy low and rent high. And what I mean by that is buy in an area that has cheap houses, but you can rent for a high price. So that brings me on to my next point of the best areas to buy in the UK. This is not a one system fits all. It completely depends on your situation. But I would say that buy-to-let investing in London doesn't work. Why? Because the house prices are just too high in London. Property prices, real estate prices in London are the highest in the world. And what happens, what you will see in the UK, is that there is not a direct correlation between the north and the south in terms of house prices and how much rent you can achieve. What do I mean by that? I mean that in London, a house might be worth £1 million, okay? And you might get, I don't know, £4,000 or £5,000 in rent. However, a £100,000 property in the north, in Wigan, is not a tenth of the rent. So the house price might be a tenth of what it is in London, but in Wigan, the rent might be 1,000 or 1,100. So there's not a direct correlation between house prices and the rents that you can achieve. So if I was investing in the UK, I would be looking from the Midlands up north and really exploring those areas. I would also advise to not buy in the area that you live because you want to be close to the house. So if there's a problem, that you can fix it. And a lot of people say this. I want to buy close to where I live so that I can fix the problem if there is one, which is ridiculous because unless you are a tradesman, you're not going to be able to fix things anyway. So you're going to call someone to go and fix it. So to buy in your area when it has a lower rental yield than somewhere 2 hours away, just so that you can go and fix something that you actually can't go and fix anyway, is a ridiculous strategy. So I would always advise people that they need to find the place that works for them. And by finding the place that works for them, I mean find somewhere where you can buy houses cheap, but you can rent them high. So if you buy out of your area, who's going to fix the problems? Who's going to be there when there's a problem with the roof, when there's a problem with the shower? A management team. There are management companies all across the UK for around 10% of the rent will be full-on property managers and you will have a complete hands-off experience. If there's a problem, they'll get their maintenance people to come and sort everything. They'll collect the rent, they'll do the viewings, they'll upload the property to Rightmove, they'll make sure that they have the tenancy deposit. And for 10% of the rent, I think that that's a fantastic deal. It gives you back all of your time. It means that you can rent 3 hours away and you can still have money coming in. I have properties that are over an hour away and I haven't been to them in 2 years because I don't need to, because I've got a property management team that sort everything, and if there's a problem they just tell me and it's sorted. So don't just buy in your area because it's close to you, because that means that you're going to have to fix the problems yourself, and most of the time you're not even going to be able to. So just buy where the rents are high, buy where the house prices are low, and get a great management team. How are you going to find a great management team? Well, you're going to go on Google and you're going to type in management companies in that area that you've bought a house, and you are going to look for 5-star reviews, and you're going to make sure that everything adds up, and you're going to go in, you're going to speak to them, and if you have a good rapport with them and they seem really nice and they seem like they're going to help you and they seem like they're good people, then you're going to put your trust in them. If you get really bad reviews, or if you go in, you don't click, then you're going to walk away. You're going to find somebody that you do click with. It's important that you look after your management team and that you treat them with respect and that you have a good rapport with them, because they are looking after your most important assets. My last piece of advice for anyone starting their buy-to-let investment journey is do not buy with your feelings. What do I mean by this? I mean, if you go into a property and you like the look of it and you think, I would live here, that is not a reason to buy it as an investment property. That would be a reason for you to buy a house to live in. However, you need to use numbers, not feelings, when it comes to buying investment properties. So if it's a beautiful house, but the house price is 150,000 and the estate agent tells you you can only rent it for £600, then you're going to walk away. You're going to walk away. Okay? If you can get a 10% yield on your money and the estate agent can show you proof of other properties that have rented out for that amount and you can stack it up against what you're paying for the house and it's a 10% yield, then by all means you're going to buy it. And it doesn't matter if you think the house is ugly, it doesn't matter if you think that there's not enough windows, there's not enough light, it doesn't matter. It's about numbers and not feelings. If you are starting out on your journey and you are not 100% confident in stacking deals, in doing your due diligence, in making the numbers make sense, then I would advise you to find a deal sourcer. Deal sourcers are a great way to get started because you can connect with them, you can speak to them, you can tell them exactly what you're looking for, and they have the expertise and the knowledge to go out and find that deal. You can also learn from this process, and then after this you can go and do what the deal sourcer has done. You can find your own deals. If you are working with a deal sourcer, they should be more than happy to give you the knowledge and explain step by step what they do, and maybe even let you come and look at what they do day to day, and they can explain to you why this deal stacks and what they look for when they are finding deals. So my piece of advice would be, if you're unsure, if you're completely unsure, find a deal sourcer, tell them what you're looking for, let them help you, and then learn from them, and then go and find your own deals using the knowledge that they provide. If you are on your property investing journey and you're just at the beginning and you're a little bit unsure, I can help you find the deal that you are looking for. So if you are a little bit unsure and you just don't know what's going on, then please either comment on here or go to our website. We'll leave a link in the description. Drop me a message, my phone number, my email are on there. I can give you a call, we can have a Zoom call, you can explain what you're looking for, and we can see if we can work together. And the very last tip for anybody out there starting this journey right now is to take action. Go out there, start viewing houses, start talking to estate agents, start talking to deal sources, and you will speed the process up tenfold. Don't be sat there in 30 years saying, I should have been a property investor, and look at how much the house prices have gone up. Thank you for watching. If you've liked the video, hit the subscribe button, and I will see you next time.